Welcome back, champions. Another mind-boggling stock news. The outlook for the internet software and services industry appears mixed this year. Estimates are showing a clear upward trend through the past year, driven by a business resurgence at some companies. Others were positively impacted by the pandemic and the rush-to-digitize trend that it gave rise to, but then fell into a tough spot as the market corrected itself. The internet software and services industry is a relatively small industry, primarily involved in enabling platforms, networks, solutions and services for online businesses and facilitating customer interaction and use of internet-based services. Being the backbone of the digital economy, it's hard to see this industry doing badly over time. Some of the long-term trends are playing out this year even as concerns of a slowing economy looms large. Those trends are technology adoption by businesses, subscription-based model and infrastructure build-out, increasing costs for players. Improving economic indicators and continued geopolitical tensions affect most players, but some are better equipped than others to deal with the situation. The aggregate share price of the industry increased 11.6% over the past year compared to the broader sector's increase of 51.3% and the S&P 500's increase of 24.4%. The industry was trading more or less in line with the S&P 500 until December, when analysts moderated estimates. Two stocks worth considering from this industry for your portfolio in 2024 are: Number 1. NetEase, Incorporated. Hangzhou-based NetEase provides online services focusing on diverse content, including games, music, other services and education, dictionary, translation, and including a range of smart devices in China. Its products and services are focused on community, communication, and commerce. NetEase is currently building its international business through fresh gaming content that appeals to an international audience. For this purpose, it has also established its own studios in Japan, Europe, and North America, and is building creative talent in these regions. It is also expanding reach beyond PCs and mobile devices to consoles that facilitate gameplay seamlessly across devices, which further helps to grow the user base. In the last quarter, the company saw particular strength in gaming on the back of new releases. With several other new games spanning different genres and geographies in the pipeline, management is optimistic about customer additions and growth prospects. The strength in UDAO was driven by its learning services, due to the consistent launch of high-quality courses in the human language coach, Hi Echo, thus expanding the user base as well as its online marketing services. The cloud music business is undergoing a turnaround as management focuses on more profitable content and nurtures independent talent for the future. Shares of this company have gained 16.8% over the past year. Number 2. Okta, Incorporated. Okta provides a wide range of identity, access, and authentication solutions for small and medium-sized businesses, universities, nonprofits, and government agencies within the U.S. and abroad. Its products are sold through a direct sales force and channel partners. It is headquartered in San Francisco, California. The company is on track to grow its business at a 37% compound annual growth rate between 2021 and 2024. Management estimates that the total addressable market for Okta is $80 billion, and its innovative product portfolio of privileged access, identity governance, and access management solutions, both workforce and customer, that are provided as a single platform positions it for rapid expansion. While macro pressures are building up, secure access is vital to operations and the scope for growth substantial, which is likely what drove the increase in backlog and the improvement in revenue and profit outlook for the year. It is usually the larger customers that are able to continue capital investments in downturns, and management commentary indicates that it is the customer cohort with $1 million plus annual contract value that grew the strongest. Okta generates 97% of revenue from subscriptions and has a customer retention rate in the mid-90s, which provides excellent visibility. Shares of this company are up 24.9% over the past year. While estimates haven't changed in the last 30 days, in the last 60 days, the 2024, ending January, estimate increased 23.7%, while the 2025 estimate increased 27%. Hope you found this analysis helpful.